Can you see the silver versus gold
Yeah,
weekly closing?
okay. Now
Okay.
this goes back 5 years, and these are weekly closes of silver divided into the price of an ounce of gold expressed as a percent. So back in 2020, silver was like 0.9% of the price of gold, and it shot up to 1.5 plus percent the price of gold. That's a big move.
Yeah.
That's like buying a stock at $83 and having it go to 155 in a matter of about 6, 7 months. Okay. So the spread shot up then. Okay. But since that peak in late 2020, early 2021, where silver outperformed gold, over the subsequent years, even though both metals rose in price, silver has lagged gold's performance. And that's why this spread chart has gone down in layers.
Yeah.
And back in April, it was back under 1% again. Well, 1%, if you go back 50 years on the spread, you'll see that is a very low level. And normally, in fact, 20 of the past 50 years, silver's at least been 2% of the price of gold. That's a normal almost. Well, you can see what's happened since April. Silver's been gaining, the spread has been gaining, the top chart there,
Hmm.
versus gold, but it's not up to the green line. And the green line is what we're watching. That level, if you take it out, and that's 1.31%. And by the way, we've done this study using monthlies and long-term momentum, but below you'll see a momentum chart of the spread, which is measuring the spread units versus a 40-week average of the spread. And unlike the spread chart, which is still moving up toward the structure, the momentum chart has already hit it
Yeah.
and it's headed back. Right now, we're higher than that last read of that uptick you see. So a few weeks ago, we hit the breakout point, stopped at it, pulled back, and we're headed toward it again. If momentum upticks much more this week than we already have, and you get up to about 1.25%, again, divide December silver into December gold, expressed as a percent, that momentum breaks out. And you
Hmm.
can bet then that shortly thereafter, that spread is going to break out. Okay, so what? This is exactly what happened to gold silver spread in late 1979, prior to the 6 month explosion. And it happened in September, October of 2010, when silver was in the $20 range, upper 20s, and it went to 50 by April 2011. What told you that it was going to accelerate was not that it was already in an uptrend, because it already was, no big deal. The spread said, I'm going to blow my cork. And during that final 6 months, what happened? Silver and gold both exploded, but silver beat the pants off of gold because the spread broke out. We're watching the top, that green line. If you break that out over 1.31%, we expect a massive rapid surge up to at least the norm of 2%. Well, even right now, if gold just sat here at $4,000, it's 4,200 actually. Do 2% of that's $80 silver. Okay. But gold isn't going to sit still. And again, what if gold, as we showed on the very first chart, does another equal ratio scale bull trend move that it did in 75 to 80 and 2001 to 2011, an eightfold move? That means gold's at 8,000 plus. Could do it fairly quickly too. If silver were 2% of that's $160 silver. And again, 2% is normal. In fact, in bull market years, 79 to 80, or in 2010 to 11, the silver gold ratio, as we measure it, percent versus percent, it was at 3.5%. And in 79 to 80 was 6%. So we could get a major explosion, not only in this spread, but it would indicate to us that the price action of silver is now going to go more vertical than you can imagine.
Okay. I'm going to bring up a little bit of a longer one here. And so this is basically what you're talking about. So this is silver divided by gold. And so back here in 78, we can see that the ratio was 0.025, which basically means that, two
It
and a
was two
half
and a half
percent.
percent. Yeah, yeah.
Yeah.
And it shot up there to 8% at one time. This must be weekly or something, but
Yeah, yeah.
or daily.
This is
Yeah,
monthly
yeah.
actually. So we got
Okay.
up to like 6,
Yeah.
7%.
Yeah, that was a
And
bull
then
year for the metals. Yeah, uh-huh.
this is kind of what you're expecting, something like
Yeah,
this, a re-rating of the
yeah.
ratio, which would, the only way to really explain
Well, I
that
mean,
is that silver just,
even just to go back to the high in 2011, which was about 3.5 there.
okay, right here. Yeah,
That's enormous.
that is
Even if
enormous.
gold just sat still and silver went to 3.5%, it would go off the page. We're arguing now. There's another set of charts that sort of smack you in the face and make the point. It's the base metal charts I sent you.
Base metal
You
chart.
could stay on this chart for a minute,
Okay.
but draw a line at 2%. Drop your line down to 2. Look how many
2, okay.
times it's been at 2%. It's hardly abnormal.
Oh, yeah.
Yeah, it's no big deal. So
That's
if we
kind of
come
the
up, yeah,
average.
and you could already see the spread since 2000. There's like a downtrend too on that spread at the last couple of years, and
Yeah.
you're starting to approach that. So you could easily go to 2% just as hey, big deal.
Yeah.
Well, that's off the page even at current prices in terms
Yeah.
of where is silver price versus gold. Uh, and if we're in a bull trend, so if we match the bull trends, we could go to 3 plus.
Yeah.
And you did it quickly. You didn't do it in an arm wrestling manner. You did it in a thunderbolt
Yeah.
both
Yeah.
times.
These are parabolic, violent moves that happen in 6
Not
months
only,
and
yeah,
they're over.
not only in the spread, but in the price of silver as well. So, yeah, and this is not unusual, by the way. Silver has made a grand mistake. It's what we're arguing. Markets make errors. Anybody who's been in markets long enough knows that, hey, that dot-com top, that was an error. It went too far, too long, and therefore it broke. NASDAQ dropped 82% in the next 2 years. 82% after that bubble broke. Because it was why? Nothing wrong with the truth of the internet. It changed our lives. But they overpriced it too quick and it burst. Okay. Now ultimately it proved itself, but it had went down 82%. Okay. The same thing happens at lows sometimes. Sometimes a market will go low, abnormally low, irrationally low, and stay there. And everybody says, see what a dog, I'm not interested in that market. Just leave it alone. Don't step on it. And when it wakes up in a way that is like a sudden jolt. Like, what am I doing down here? Flip to those charts, if you would, of the copper and lead, I think what it was.
Okay.
They make
Right.
the point. So it's a reality that
Here's
people need to
copper.
realize.
And this is going back to the
Yeah.
early 90s until
You,
present.
yeah, you can in fact take that lower range you see in the 90s up to 2000. It goes back into the 80s as well. This is a Federal Reserve chart of the price of copper, by the way,
Okay.
uh, from St. Louis Fed. I guess monthly closes or something. But anyway, you lived in a range, okay, for decades. In fact, it goes back to the 1980s. But look what happened when you came out of the range.
Yeah.
You tripled. You went from 3 to 8 to almost 9,000. You've almost tripled in price. But the first doubling was a matter of a handful of months.
Yeah.
And this, by the way, was not correlated to gold and silver at that time. They had their massive move later on in that trend. Okay, so the copper did it on its own. And then look what happened after that. Yeah, you had a big drop, but look, you live in a new range now.
Yeah. Yeah. This is
Now
the
it's
new
suddenly
home.
it's a range that if you take the middle of that, about 7,500, that's still double and a half what it lived in between the 1980s and 2004. A new
Yep.
reality is what I'm saying. And it did it quickly. And
Yeah.
right now, by the way, copper's trying to break out of that thing again. And by the way, copper right now is trading well above its 2011 price high. It's not real clear on this chart, but when you look at a monthly futures, you can see it's above it. Drop down to the next chart, a very exciting market called lead. Again, you could go back to the 1980s and you lived in this dull up-down range, just like silver's been in for 50 years. And that was its reality. And then when you came out of that reality, see the red ellipse? You went from 1,200 to 3,600 in a handful of months. And by the way, this is not coincident with that copper move. This is a year later. So it
Okay.
wasn't at the same time. So it was peculiar to lead. But it went into a new reality. Oh, yeah, it had a sharp sell-off after that. That's not the issue. The issue is, but look at the new reality that prevailed since then. Double to triple the price of the old reality.
Yeah.
If silver did this, you could go like the $200+ and then level off into a new reality that's just say 100 to 250 or something.
Yeah.
Okay.
Yeah.
So what we're arguing in answer to his question, There are so many fundamentals out there that are huge involving the failure of fiat currencies in terms of distorting reality, creating monetary inflation, therefore price inflation of assets like lead price. I could have shown you a bread price chart or a beef price chart, look the same as this, a new reality, all distorted by the money unit that you showed, the M2 chart. Silver has not done so. We're arguing its time is now, and it is likely to do it very rapidly in a way that just jolts people. So if you're not already there, don't come back in 6 months. Okay. It's not the time to be joining. You were going into a new price reality, and I think likely fiat currencies will be questioned by large governments in this next debt crisis, to where are already some major governments around the world are pondering seriously moving to gold-backed currencies. We know that. And the Western world, and Japan included, could be the laggards in suddenly realizing, hey, this 100-year game hasn't been working. We need to get something more stable. But you got to go through a crisis sometimes to create that change in thought. And I think gold and silver know that's coming.
Yeah, the paradigm shift. Leveraged wants to know. He's talking a lot about how I hear a lot about how the price of silver is wrong, and he's asking, is there any other asset on the planet that is priced as wrong as silver?
No, not that I could think of right now. No, even the price of bread or beef. Go to the Federal Reserve site and type in price of bread, price of uh, beef, 1 pound of beef. They'll show you a chart just like those. And then get an M2 chart and look at it. And then go back and calculate, let's say 25 years ago, where M2 was and where it is now. Do the math and look at bread, look at beef, look at the copper, look at the lead. Silver's lagged that. I mean, if silver were $50 in 1980 and $50 in 2011, which is still a long time ago, a decade and a half, okay? The decay in the money is like 90% doubling in the quantity of money every decade, okay? Silver's way lagged to that reality, and it has the other virtue. Yes, it's industrial, but it primarily moves as a money unit. It has been money for 3,000 years as well. And I think there's a new awakening among people who are watching gold saying, silver's also a monetary metal. Go back 3,000 years. In fact, it was a monetary metal in the US one time. Okay. A new reality is coming, and silver has definitely made a mistake. And I think when it blows its cork, it's going to blow its cork. But if it doesn't work this time, then you've got one narrow place to put it. And I think what's going to happen is this crisis that we're about to face, that gold knows is coming, is likely to put gold and silver at new reality levels that's the new reality. In other words, you're not going to go there and collapse back down to $200 gold or $1,000 gold. And that's when we need to look at some of the charts we got. I sent you some log scale of gold and silver.
Yes, sir. And Johnny on the spot, share screen, log scale.
Yeah.
Okay, you can see gold monthly ratio scale since 1975.
Yeah. This is a logarithmic scale ratio. In other words, you go back to 50 years, okay?
Okay.
And the chart below is 50 years of history of silver. Now, look at the gold. Look at the gold. It's been massive upwave ratio-wise. It was an eightfold move from the 76 low to the 1980 high, eightfold gain. Then you went into a plateaued region for decade plus, 2 decades.
Mm-hmm.
Then you had another surge, also an eightfold move from the 2001 low to the 2011 high. Again, 8 times gain from bear low to bull high. Different span in time, but the same dimension. Our bear low, last one was at 1,050 price level in the year 2015. We're only 4 times, fourfold move. If we have another eightfold move, and we certainly have the fundamentals to justify it, gold's going to be over $8,000 an ounce just to replicate the dimensions of those 2 prior moves.
Yeah.
But also the main point here, though, is look at it's been gaining. Big
Yeah.
legs, range. Big leg, range. Look at the silver chart below. The other monetary metal. And by the way, silver does not move with the commodity complex. Its correlation is directly to gold. The only problem is silver will sometimes outperform gold, but overall, as you can see, it has underperformed gold in the sense that we're only just now moving up out of the 50-year range. Of course, gold's done it twice. Okay, there is no range.
Yeah.
Uh, Only now on the logarithmic scale is silver now saying, "Hey, I'm out of here." Okay, well, there's a key thing here. We've been going up in silver for a couple of years, and there's one thing we've identified at MSA that everybody can look at a momentum chart or a silver price chart and say, "Oh, it's a bull trend." No big deal. We know that it's been underway for a couple of years here, especially since 2022, late 2022, when both monetary metals had a pullback. Since then, it's been up, 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 and beating the S&P during that time, by the way. Uh, but something happened in the late phase of that 1979 to 80 move where you went vertical. And also in that bull trend that had already been going up since 2001 through 2011, something happened in the final 6 months or so of that move where suddenly silver just went vertical in a
Yeah.
matter of a handful of months, that little part right there. And also in 79 to 80, it went vertical for the last 6 months of that move. I mean, it went, a buck here, and all of a sudden it went from like under $20 to $50 in 6 months.
Yeah.
In the case of 2010, it was in late 2010, something happened there, and we'll show that in a little while, that said, "Hey, I'm going to go vertical." We're about to have the same situation now that occurred in those two late trend phases where silver went off the page in terms of multiples. In fact, if you analyze the final 6 months or so, the final handful of months of both of those bull trends, and look at the ratio move in price, if we engage in the same way we did then, the next leg up in silver is going to carry you well over 100, or it's going to carry you, if we match the 79 final 6 month dimension move, over 200. And we're going to do it in several quarters. And there's a key factor we're looking at that will signal the onset of that. And that's the silver versus gold spread. I think you've got a chart of that too.
Okay. Let me pull that one up. That is silver versus gold spread. New share. Screen 2.